Hey everyone, welcome back to Corporate Decoder, the place where we sift through the corporate jargon to find the real stories. Today we're diving into Good Times Restaurants Incorporated's latest report, and let's just say things are interesting. Stick around to see if these good times are here to stay or if they might be facing a tough dinner rush. And before we dive in, if you want more of these straight to the point corporate breakdowns, make sure you are subscribed. Also join our Discord community linked in the description below. It is a great place for more discussions and insights. Alright, so what we have here is a Form 8K filing from Good Times Restaurants Incorporated. Think of an 8K as a company's way of telling the big boss, the US Securities and Exchange Commission, or SEC, that something important has happened. It is like a special bulletin board for investors. This particular filing announces their earnings for the fourth quarter and the full fiscal year ending the 30th of September 2025. They also mentioned a conference call to discuss these numbers. Now, Good Times Restaurants Incorporated, as the name suggests, operates restaurants. They're known for their drive-through burgers and shakes, a pretty competitive space. Think about companies like McDonald's or Burger King. In this kind of market, every little bit of performance matters, and how they manage their finances can make or break them. Their stock is traded on the Nasdaq Capital Market, which is a stock exchange where smaller companies often list their shares. This means people can buy and sell pieces of the company, and the financial health of Good Times Restaurants Incorporated directly impacts what those pieces are worth. The main reason for this filing is to share their financial results. This is where we get to the nitty-gritty. It is not just about how many burgers they sold, but how much money they actually made and spent. This tells us if the business is growing, shrinking, or just treading water. They've attached their press release as Exhibit 99.1. This is usually where they put the highlights, but we'll look past the happy talk to see what the numbers really say. It's important to remember that press releases are often carefully worded to present the best possible picture. To wrap up the formal stuff, the report is signed by Ryan M. Zink, the Chief Executive Officer. He is the top dog ultimately responsible for the company's performance. So, what do these numbers tell us about Good Times Restaurants Incorporated? Well, when we look at the financial statements filed with the CC, we're trying to understand the true health of the business. Are they making more money than they're spending? Are their debts under control? Are they growing their customer base efficiently? It is like a doctor giving a company a full checkup. In this specific filing, the focus is on the fiscal year results and the fourth quarter. We'd want to see revenue growth, which means more sales. And ideally profit growth, meaning they are keeping more of that sales money as profit after all expenses. They would also report on things like their cash on hand and any debts they owe. A key indicator for restaurants is often same. Store sales growth, which means looking at sales from stores that have been open for at least a year to see if existing locations are performing better. Increased operating expenses like the cost of food or labor can eat into profits. Wednesday also look for any changes in management, like new hires in key positions or departures, as that can signal shifts in strategy or potential challenges. Now, let's look at the broader picture for Good Times Restaurants Incorporated. This is a company operating in a very challenging and crowded industry. The fast food and casual dining sector is constantly evolving, driven by changing consumer tastes, the rise of delivery services, and intense price competition. To succeed, companies like Good Times need to consistently innovate, whether it is with their menu, their customer experience, or their operational efficiency. A key risk for a company of this size is its ability to adapt quickly to market changes. If consumer preferences shift away from what they offer, or if they can't compete on price or convenience with larger chains, it could seriously impact their business. Furthermore, economic downturns can significantly affect discretionary spending, and restaurants are often one of the first things people cut back on when money is tight. So, the company's financial results are not just numbers on a page, they reflect how well they are navigating these external pressures and internal strategies. Their ability to manage costs, attract and retain customers, and expand responsibly will determine their long-term success in this competitive landscape. Overall, Good Times Restaurants Incorporated is in a tough spot within the restaurant industry. While this filing announces earnings, the real test is in the sustained growth and profitability. We're looking for signs of strong financial performance, efficient operations, and a clear strategy to stand out in a crowded market. If their numbers show consistent growth in sales and profits combined with smart cost management, it would signal a company on solid footing. If the numbers indicate stagnation or decline, it would raise concerns about their future direction. The restaurant business is all about execution, and a deep dive into their financial statements is crucial to understand if this company is truly delivering a good time for its investors. Alright, That is our breakdown of the Good Times Restaurants Incorporated filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.